Now, Nike is one chart that I will just get to a clean chart here on the weekly time frame. We can even go to a higher time frame because this is really something that has been trading for a while. Really, what I think about this is, especially with earnings also tonight, this might see some volatility. This is something that is worth putting on the watch list. Immediately, what I think about a chart like this is, well, I remember charts like Disney. So if we put two things next to each other, I always like making comparisons, and some charts lend itself very well to it. Well, it's very, very similar. The difference there is that Disney already made it to the liquidity below the COVID low, while Nike has not done that yet, right? So, not saying that these charts have to play out exactly similar. I'm just saying, well, some charts have already taken the liquidity way lower down below that COVID low. And I know from experience, I was trading Disney as well around those times that that level there held. So at least being as open-minded as to thinking, well, maybe we see downside all the way into that low. Now, I'm not saying there's nothing to do before we get there. There's other options as well, just to keep that in mind, that that would become a plausible scenario. Realistically, what we've done here is exactly the same. The timing is a little bit different. So this thing, Nike topped out in November of 2021, which is when a lot of things topped out, Bitcoin as well, and a lot of risk on assets in general. Disney topped out earlier that year, but ultimately the price action is very similar, and there is no reason why a chart like Nike could not fill that wick, while a chart like Disney has done that. So that would be at least learning from past price action as well. That is an important swing point, in my opinion, to keep in mind for Nike. So that's all the way down at $60. And I understand that, well, right now we're trading at 94, and that seems quite far out. So I do want to have some options higher up as well. All right. So entry one is move below 88.66 and then closing a 4-hour back above, right? Stop loss on the low that is made below 88.66. And at that point, if I'm thinking, well, what am I going to target from there? Well, I'll look wherever it is that I'm taking an entry, wherever it is I have an invalidation. And at the very least, well, I would want to see typically a 2-to-1 risk reward trade, but I'm also just looking here at what would be good targets for this. So I would say if we get back above it, first target could be, I would say 96.22. Second target, well, I'll zoom out a little bit on the monthly to see it a little better. So we can play to 96.22 first. Second target can be the highest level, so that the top end of that bearish fair value gap, which is 99. And I would like, I mean, at that point you're up 7-8%. We're probably that is enough for that position with what is probably going to be a tight stop loss below 88.66. So really, would say 96.22. That is a target, and from there we'll basically keep updated. It's all also going to depend on, well, how we come down here. So it's more important that you already know, well, what would be an entry for me. But to give as clear of a target as possible, I would say stick with 96.22. Then second entry is getting below 82.22 and closing a 4-hour back above. Stop loss below the low that is made below 82.22. And let's see, well, if you're breaking down levels, a very logical first target, right? If I'm having horizontal levels of interest based on my monthly time frame, well, the first target for that is going to be 88.66. So basically that broken quote support level then turning into resistance. So looking at something like a 7.8% upside and maybe something like a 2% risk on that setup, which does not mean 2% risk on your portfolio, but at least that would be the idea. Then third option would be move below 71.37. So you can also see that there's a big gap between these two levels. That literally means that stems from the fact that we had a huge wick there on the monthly. I kind of want to show that here on the 4-hour. You see a lot of gaps here. That was a big wick on the monthly time frame. So that is something that is leaving behind a big area where I'm essentially not interested in doing any business long until we really hit a significant level lower down, which is very specific, the midpoint of that gap, which is also something that honestly, well, that is an ICT concept and an ICT idea, but not many people are aware of that. So getting below 71.37, closing a 4-hour candle back above, stop loss below the low that is made below that 71.37. And well, a generous, nice, good target for that would be 82.22, literally the level above you that was not held then, right? And for the lowest option, I would say, well, getting below 60, closing a 4-hour back above, then stop loss below the low that is made below 60 before closing back above. And your first target could be, well, 71.37. So the lower we go, actually, the more significant the bounce is probably going to be that we're going to get from those levels. So it's a warm welcome to not oversize on the first levels here. And at least for you, Doc, I would stick with 1% risks here and here. Now, if at some point we're coming lower down and we really get a good setup, maybe at some point we'll decide to risk more than 1%, because at some point, the lower you go, also building up bullish divergences over time, it's going to depend also on the way how we come down, but especially if we're coming down in like an impulsive way, leaving lots of fair value gaps behind, then there's a likelihood that we're really going to see a good move up again, which at that point, especially if your portfolio is already with a profit buffer, we can maybe look to risk even a little bit more as we go lower, because you can also see that the target one is always a bigger percentage move. But does that cover where you need to know where you need to enter, put your stop loss, and then the first target at the very least? And as a general rule of thumb, right, at the first target, you're out 75%, and with the remainder of the position, will basically keep updated from there, right?
Yeah, no, that's perfect. I just have one last question on this stock. You know, on the off chance it goes up and we get that the
Yes.
99.05. So you're looking for a 99.05 monthly candle close above that level.
Yes.
And then
Yeah.
what's the criteria after that?
Well, then the criteria actually would be getting below 97.64, closing back above it on the 4-hour. So we would first need to see a monthly candlestick to close above 99.05. That is the first thing. Until that happens, there's nothing to do to the upside to chase price to the upside. When that happens, we treat that level exactly like these levels below us. So we would need to see a move below 97.64 and a 4-hour candle close back above. And at that point, let's see what we would be looking at. Um, well, a good stop loss for that would be actually 96.22, which would be the bottom of that area. That at that point that wouldn't need to come back into play. And targeting to, for example, when I'm looking for a target, right, on the 4-hour time frame here, I am noticing that way back there, we're actually coming down. And what are we doing here? We're leaving behind a fair value gap, and we came very close to it, but we've not ever came back into it to refill any of this inefficiency. So really pointing out to this here. So if you ask me what is a good target, well, a good target is to play to something like this, equal highs lining up with the bottom of a fair value gap. So good target there would be 102.7. Now, kind of want to see again 102.7. If I see something like this, right, I can add in a line just for a moment to give me a low time frame idea and at least an execution time frame idea of a good target. 102.7, and kind of just visualizing in my mind how that would need to look. So I would put my stop loss, let's say, let's do 95.98 for a stop loss, wherever we close back above 97.64 as an entry. And then a good first target, I would have then well, a conviction that I want to play back above 100 and then 102.7. Like again, this little detail where this candlestick has not tapped 102.7 is interesting to me. That means that there's liquidity here from our fair value gap lined up with buy side liquidity above this high. And that is something that is very likely going to come back into play at some point. So from 97.64, if we get back above it, let's see, that's a decent move. But you can see if we're going to play from higher, our percentage move is going to be less percentages. So if we get lower down, I actually am more interested. Now, that's not to say that we won't play it. That is also perfectly viable.